market is waiting to hear from the RBI governor. What are your thoughts there?
So, obviously RBI will have to be cognizant of the global scenario, and clearly uh, the mood in the global, particularly the US Fed, has dramatically changed in the last 2 to 3 months. Uh, now the now the entire conversation, or the narrative, is not about uh, whether the interest rates will go up or not. Now it's a question of whether it's going to be three hikes in a year, 5 hikes in a year, 6 hikes in a year. That's the narrative. So I'm sure, and of course the inflation has also shot up quite a bit. So I think uh, RBI will definitely be cognizant of these facts, and probably, if not this time, but at least we'll talk about uh, the the necessary actions that they may have to take over the next few quarters.
What are your thoughts on the interest rate sensitive sectors like realty, NBFC, housing finance, financials, autos right now? Or do you think any demand impact will happen if the rates start rising?
I am not overly worried at this point in time on that side, because if you think about it, India as a country has always been a bit of a higher interest rate, higher inflation country, and maybe about 25-50 bips doesn't really change the trajectory too much. I think the important thing is that the we are seeing a lot of green shoots at the ground level. In fact, if you see most of the data points, the economy has bounced back to pre-COVID levels or higher than the pre-COVID levels. Whether it is the freight volumes, whether it is the air passenger traffic, whether it is the railway passenger traffic, whether it is the steel demand, whether it is cement volumes, all of these data are very clearly saying that the we have crossed the pre-COVID numbers. So clearly, there is a lot of vibrancy at the ground level, and we have generally seen that. And we are coming out of a 2018, 2019. I'm talking about the pre-COVID era. Calendar year 2018, calendar year 2019 were a downturn in the economy, and I think we're coming out of it clearly. So I'm not overly worried with maybe a 50 bips kind of interest rate hike over the next 12 months.
Mhm. What are the areas you have been raising your portfolio in the last 2, 3 weeks or months of volatility in the market?
Sure. So, if you see, we are almost at the fag end of the quarterly results, the quarter three results of FY22. And, one thing is which has come out very evident, is that the private sector banks have delivered very, very decent, very, very resilient results. They also started showing much higher growth in terms of the loan book growth. So we've added private sector bank to our portfolios. What we've also added is a couple of new generation businesses on the e-commerce side. The stocks which we couldn't participate earlier because they had run up quite a bit on the listing and after the listing, and now they have corrected quite significantly. And some of the businesses which have a very, very strong consumer franchisee, and they are like a duopoly kind of, or they are literally like 40-50% market share within their space. And they have created a very, very uh, they have actually addressed a serious need of the consumers. So we participate in couple of we participate in those businesses also in the recent times. uh, we've also added a couple of stocks on the IT product side, and on the entertainment side.
Right. Sachin, what are the areas you're trimming your exposure to, which has done phenomenally well in the last 1 or 2 years? Is it IT? Is it metals? Anything which you have trimmed?
Uh, so we had a couple of investments on, say, on the consumer alcohol beverages side. So we've actually trimmed our positions over there because they've done reasonably well. They've given us very, very phenomenal returns, and there have been a couple of late developments at the corporate level. So we were a little unhappy with that. So we've exited some of those positions. We would have also booked profits in some export oriented businesses which have also delivered fairly decent returns, and which have actually now probably reaching their at least from our perception, they're reaching their full price kind of valuations.
Hmm. What do you make of this commentary coming in from Vedanta on setting their capital allocation policy right and refraining from any kind of a corporate restructuring? I'm not asking about a buy sell call on the stock or anything. I'm just taking a view on the management commentary. Whenever a management commentary comes on, that will set the capital allocation in order now. Have you looked at it?
So, frankly, I haven't looked at it very closely because, generally speaking, we are little averse investing into commodity businesses. But on a broader scheme of things, from your point, is nothing to do with particularly with this company, but broader scheme of things. First is that the company coming out and making that statement itself says that yes, they were doing something wrong in the past. Second, now that they have taken cognizance of that and they are trying to work on it, I think it's a positive step, and that shows also about how the companies also need to respect the markets and the overall collective wisdom of the markets. And I think the most important thing is that are they really going to walk the talk? Because we've seen in the past a few companies mention about it, but not everybody is able to actually remain disciplined over on a sustainable and a consistent basis. You may remain good, you may keep on doing things till the bull markets are there, but once the market cap agenda is over of the management, they try to keep all this on the back burner. So we have to be a little vigilant on this kind of actions.
Right. All right, Sachin, we'll let you go on that one. Thanks so much for your time this afternoon.
Thank you.
Time for a break. On the other side, we'll talk to the management of IGL. The stock has been under a bit of a pressure on rising